the advanced market structure. Okay, so we began by clearly stating in the markets, according to basic market structure, right? We learned that there will first of all be, there will first of all be this, and let me say a break of structure, right? A BOS. Then markets will have to come back into that strong zone, the strong demand zone, to buy. That is what we were told. All right, that is what we were told. So this is what we were told will happen. That this will be our demand zone, and then we'll buy from here. But unfortunately, that's not the reality in real life. The irony of it. What happens is that there will be this. What a line. So there will be this. Then suddenly market comes, takes this one out before there is another. Before the actual buy takes place. All right. So we realize that. So we realize that the price doesn't actually buy from here. It first of all takes this zone out, right, before it continues to the upside. So we established that 80 to 95% of the time, or let me say 90 to 95% of the time, this happens. All right, this happens. If it's going to be a sell, market comes like this, breaks structure here, then takes out this one, the initial supply zone, before actually selling. So we would realize that this zone will not hold. It will take it out before there's a sell. All right. So we settled that. So today what actually has happened, right? With these things taking place, what actually happens is called inducement liquidity. So today we are talking about liquidity as a whole. What is liquidity? What is liquidity? I am not a fan of all that long explanations and all that. No, I like practical pictorial stuff. All right, I believe it sticks better. I believe it really does the job. So I will use this pictorial stuff to communicate the answers, and you can write as you are led. All right. So, okay. First of all, there are three types of liquidity. Okay, there are three types of liquidity. Let's get it in place. Three types of liquidity. There is, first of all, transactional liquidity. There is structural liquidity. And then there is inducement liquidity. Liquidity. All right, let's leave it here. Okay, so transactional liquidity, structural liquidity, and inducement liquidity. So basically, what we are trying to address here is that these are the three major types of liquidity. What is transactional liquidity for? What is transactional liquidity for? Transactional liquidity is for correction. All right. Transactional liquidity is for correction. Structural liquidity is for continuation. And finally, inducement liquidity is for expansion. Today's session won't be that long, all right? Inducement liquidity is for expansion. So let's start with, let's label it, all right? Let's see. So, okay, let's get straight to the charts. Let's go to the chart straight ahead, to the chart straight ahead. All right, I hope you can all see the chart, all right? So we have established. Can you hear me? Can you hear me? All right, so we have established that basic market structure says this, then we buy, or this, then we sell, meaning that this is our demand zone, supply zone, and we said that that is not what happens. All right, so instead what happens, we get something called a sweep of liquidity. This happens this happens. What is liquidity? Liquidity simply means money. Liquidity simply means money. All right, no complex explanation. So I know that basically for some of us who have had the basic teaching, you learn that, tell you that let me say something like this. You have this will be a trend line liquidity. Then what will happen is that price will take down all of these ones before. Let's get this. Yeah, so there's a trend line liquidity and price will take down this one. That's what's going to happen. So all this, according to what normally we've heard, is that this is liquidity. All right, all this is money, all this is liquidity. And another way, if you see something like this, okay, let me clear it from there. If you see something like this one, this is also liquidity. All right, and that this what you're seeing up here is liquidity. What's it saying? It's saying that price will be attracted here, come and take out the liquidity here before the actual move takes place. All right, and in a way it's fine, but it doesn't really communicate liquidity well. All right, it doesn't really present the idea well. Let's get a wholesome meal on what liquidity is. All right, so I said, first of all, liquidity simply means money. So no, it does not have to have a trend. So you are getting to that. For us to see any move in the market, money is required. In fact, this whole chart thing you are seeing, money is required to move it. All right, if you understand this, for you to see that price is buying like this, it means people are buying. There is a buy initiation going on. If you see that price is selling, it means that price is bearish, people are selling. So it is causing, without anyone buying or selling, you have something like this. Let me get this. You have something like this in the market. Nothing will be going on. No one is buying. We call it a silent market, meaning the market is quiet. There's no buy, there's no sell. Indecision is taking place. All right, nothing is happening. The moment someone buys, then you realize he doesn't want to buy. All right, so the moment someone buys, you see price going up. If the sell is heavy, you see price going down, meaning there are more sellers in the market. So for you to see price action, meaning there are active buying and selling executions going on. All right. So the market needs money to move. So you see something like this. When you see this is a strong zone, you will see that price comes. We'll have to take this one out first before it moves. Why? Because a lot of buy orders are sitting down here. A lot of buy orders are sitting down here. So market takes out all these buy orders, stops them all out, has gathered enough money to buy. All right, to move to the upside. I hope you are getting it. Okay, so just know that liquidity is money. Liquidity is money. All right. So what they really taught us, just like they said, this is a strong zone, so you have to buy from here. Yes, it communicates what we do in the market, but that doesn't fully communicate it well. You should understand that first there will be a sweep. They'll take out this zone before the buy happens. All right. So same with liquidity. The idea wasn't fully communicated well, and oftentimes it was diluted. Okay, it was diluted. So now let's touch on these three major types of liquidity. All right. We are starting first with the transactional liquidity. So we've already explained. Oh boy, we've already explained this. Price comes, right? Then we have something like this. For the sell side, and I've already told you that speculation of price, we start from the left to the right. Okay, let's look here. Okay, so this is a bullish move and this is a bearish move. All right, let's analyze these two here. 1, 2. If you're able to get this, just the foundational session we are having is enough to make you money. At least you should be able to have a 50 to 60% win rate by getting this. Whew. Okay, so now let's begin this. Now, what did we establish? That price, I missed this one. That price would first of all have to take out this zone. Okay, it will have to take out this zone. I hope you can all see the screen. You have to start charging people who come in. So, all right. So price will take out this zone. Initially, we would have said that okay, this is a strong demand zone, so we are expecting it to be like this. No, that's not what happens. Price takes out this zone, and we have this is our transactional liquidity. All right, that's our transactional liquidity. Same thing here. Price takes out this zone for the sell. All right, and this is our transactional liquidity. What did we say transactional liquidity is used for? We said it's used for correction. What do we mean by correction? Once we have this, let me change the color so that it can be a meaningful color for us. I like red. Let's use red. Okay. Oh, stay focused. Okay. So what are we saying? We are saying that once price gives us this and takes out the opposite side, all right? That's a transactional liquidity. Why? It's a transaction that is going on. What happens is that after a transactional liquidity, we see price reversing back. This is a correction. Price corrects before it goes back up. All right. Let's see from this side too. Okay, so we have our sweep, then break of structure, then we have our reversal before there is a sell. All right, what happened? This was our transactional liquidity. If this is our transactional liquidity, price will take this one out, then come back here. Sorry, come back here to sell. I hope you are getting it. So transactional liquidity is used for correction. When you see price make a major move like this, it will come back. If you, in fact, let's look at basic market structure, right? What happens? Let's see a trend line. Sorry, not trend line, a trendy market. Higher high, higher low, higher high. Did we just see a transactional liquidity take place? Higher low, higher high, higher low, higher high. Do you get it? So all this is transactional liquidity. It's a transaction taking place. Transactional liquidity. Okay, so let's, oh boy, meaning that all these zones here, all these are zones that are here. Okay, all these are prospect zones here that can or may not be respected. Let's come back to this. However, so what are we seeing? We are saying price take out the opposite zone. After this, we are saying this is our strong zone. All right, what happens is that price comes back. Remember our types of, so this reversal is our this reversal is our correction. All right, it is also what we call the substructure. So our substructures happen within this area during the correction. If you remember yesterday's class, all right, so our substructures happen here. They form here. You see higher low, lower high, lower low, lower high, lower low, then something again. All these will be substructures happening here in the correction. All right. We have our bullish, our zone. All right, price comes this way. Sorry, let's clear it. Price comes this way, takes out the zone, right? Sweeps it. There's a sweep of liquidity here, because definitely there will be buys, but there will be buy entries here. So it takes out, sweeps them, then we have this. A transactional liquidity takes place. Then after the transactional liquidity, what are we expecting? We are expecting a correction, a reversal. All right, the price will come back down before there's a buy. And we learned in our structures that there are three types of structure. All right, that there are three types of structure, and the first one is the swing structure, the substructure, and the minor structure. All right, so this is our swing here. Our swing happened nicely for us here. Our swing structure happened. All right, then after that we had our substructures which will form in the correction. So this we are seeing here before the buy. All right, this we are seeing here, the reversal. That is where our correction is. And in the correction, you see minor structures, substructures form. Meaning, if you go to the lower time frame, you will see you could get different setups to sell down. So there are substructures here before the minor structure, the actual move that we are looking out for. So let me not confuse you. Let me just stick to this one. So after the transactional liquidity, which happens after our transactional liquidity, there's a correction, meaning price reverses before the buy. So our transactional liquidity, you can't have a correction without a transactional liquidity, meaning an opposite zone, which is here, had to be taken out. Why are we saying so? Because remember, let me take this from there. If we look at it from the opposite way, right, you can see that this too looks like a break of structure, meaning possibly there are sell entries to appear. But now what happens is, because we are looking for a buy, right, this zone takes out the opposite zone. Now there is going to be a reversal. That is the correction before the actual buy. So whoever would have set up their sales from here, money come, money go. That is how that person would have been taken out, or all those entries that would have been taken out for a correction back to the downside for a buy. I hope you are getting it. All right. You can as well revisit the session and watch it again. So reversals are corrections. Yes, reversals are corrections, just as we saw here. This you are seeing here, from here to here, one. Those are reversals, but they are also corrections. All right. Anytime you see any impulsive market price movement, you will get a correction. So with the correction, market is actually filling gaps. All right. Okay, let's take this out. So that is it for transactional liquidity. The next we are talking about is structural liquidity. What is structural liquidity for? Structural liquidity is for continuations. What are we saying? First of all, where is our structural liquidity? In this buy setup, this is our structural liquidity. Okay. So what happens? We have first our let's look at it here. We draw our line, our zone here for in a bullish market, alright? So you realize that there is a break of structure here. Our basic market structure didn't play out. We have a strip of liquidity, we have transactional liquidity, then we have structural liquidity. Alright. What's a structural liquidity for? It's used for continuations. Alright. So what you realize is that there will be another correction. Price comes back here, takes out this zone here, and then buys. Structural liquidity. What is it for? It's used for continuations. Alright. Structural liquidity is for continuations. Structural liquidity is for continuations. Transactional liquidity is for correction. So our transactional liquidity is right here. When we say liquidity means money. Meaning money is sitting right there, and the money will be swept for the major moves to happen. All right, for the major moves to happen. So transactional liquidity here is taken out. Awesome. Meaning this opposite one is taken out. We get our correction or reversal here, and another transactional liquidity happens here. Then we get another reversal, right? It takes out our structural liquidity before the minor structure buy that we will take from here. Let's look at it from the sell side. Let's label transactional LIQ. All right. Let's look at this. Okay, then this is our structural LIQ. No, it didn't call it. Right. That's our structural liquidity. All right. So correction 1, that is our correction 1 here, and correction 2 right here. Guys, I hope you are getting it. All right, let's look at it from the bearish point of view. We have this. What I was saying, price comes here, there's a BOS here, sweeps, takes away this zone, right? I think this is too large. Let's see. So price takes away this one. Price takes away this zone, right? Sweeps the zone, break, transactional liquidity takes place, reversal or correction, right? Another transactional liquidity. Then structural liquidity is taken out before the actual move. Where is our structural liquidity? Our structural liquidity is here. Our transactional liquidity is here. Okay, so I hope it's sinking in. Let's label this. Our transactional liquidity is right here, and our structural liquidity is sitting here. What happened? We had this. First, transactional liquidity, structural liquidity has come after the reversal, right? Or correction. Let's get us our transactional liquidity again before we see a structural liquidity taken out before the actual sell. Labeling it. Give me a thumbs up if you get it, okay? Give me a thumbs up if you get it. Give me a thumbs up if you get it, or let me know if you get it. If you have a question, so you can ask, and I will do justice to that. Let's clear all these. So we've labeled our transactional liquidity, we've labeled our structural liquidity. Now let's talk about inducements. Whenever you see a swing structure with no structural liquidity, you are about to get an inducement liquidity. What is structural liquidity? We said structural liquidity is used for continuation. So meaning if I get this break of structure here, you've gotten a swing structure, right? If I didn't get this, let me draw a one so that I won't confuse some people. So this for a sell setup, okay? If I got this, let me see something like this, with no structural liquidity, meaning expecting price to come here to take out this one. If I didn't get this, what I am prone to get is an inducement liquidity. And if you look at it closely, we started by saying in the basic market structure, right, this is supposed to be its, that there will be a break of structure here, then price is actually supposed to reverse and buy from here, but that is not the case. All right, and you realize that after this BOS, there is no what's that thing called? There is no structural liquidity. All right, this is not here. This is not this is not here. So what happens is that price comes to take out this initial zone, what we are calling the sweep. It's an inducement before an expansion. So we said inducements are for expansions. In fact, let's go to the market and see actual. The way you guys are quiet. All right, so let's look at the market. All right. Oh, this is our structural liquidity. Do you get it? Price had to come take this out. All right, take out the structural liquidity before the buy. When we look at it, we can see here our transaction. Sorry, our what's it called again? Our transactional liquidity is here. Our second transactional liquidity is here. All right, before structural liquidity here. So what happens? Let me take the. We get this here. Do you see what I was talking about? So this is what I'm talking about. So we have transactional liquidity 1, transactional liquidity 2. Already we have our sweep here. We have our sweep here. So 1, 2, then structural liquidity is right down here, which has been taken out here. It has been taken out here. Then the actual buy takes place. Let's find another. Let's look for it again. I think you find it here. Let's see. You see it most of the time. Okay, let me look at this. I think I can see something here. Beautiful. So what happened here? Our zone is marked out here for us. Basic market structure failed. It takes out this one, right? It didn't just end there. So we have our sweep, goes back up, gives us structural liquidity and transactional liquidity before our buy. All right. So when we look at it, we get our buy here. All right. We get our buy here. And not just that, if you are really good at marking our zones well, you'll be able to spot good trades. All right. You'll be able to spot good trades. I, on the other hand, I like to mark it this way. You will find another block here. Yesterday, someone was asking about another block. You find another block here. When you see the wick like that, you go to the lower time frame, you see it. So I would have marked my other block. I would have marked my zone here. All right, to get precise. I like precise entries. I like precise entries. It reminds me of the trade we took. Was it 2 days ago? For some time, it was ranging. I think EUR GBP. For some time, it was ranging. I was like, this is not something I like. I like precise entry and moves. All right. So what did we see here? We saw basic market structure fail. We got our sweep, structural liquidity, transactional liquidity coming down here for the actual buy to the upside. All right, for the actual buy to the upside. Yeah. So this is our. Let me label it for you. We first of all have our transactional liquidity 1, transactional liquidity 2, structural liquidity is here, and our POI is down here. If your POI was up here, you would have still got a trade. The POI would have been down here. So let's just mark all here. All right. Great. So what happened here? What happened here with this zone is what we call an inducement liquidity. All right. This is what happened. It got induced. If it was like this, right, then this would have been our structural liquidity, right? But that is not what we got. So this would have been our zone expecting a buy. One of the credentials for us to say, yeah, it's a good deal for a buy. This would have been our structural liquidity. But what we got was this straight basic market structure that will fail. Then we get our nice setup, structural liquidity, transactional liquidity 1, liquidity 2, then the actual buy takes place. Understanding this basic one alone will give you money, will help you make a lot of money. It will give you at least a 50% edge, at least, meaning it's more actually. Great. So we are done with the 3 types of liquidity: inducement liquidity, structural liquidity, and transactional liquidity. And what did you say transactional liquidity is used for? Transactional liquidity is used for corrections. All right. What is inducement liquidity used for? Someone should kindly answer. Inducement liquidity, what is it used for? Inducement liquidity is for expansion. Transactional liquidity is for correction, and structural liquidity is for continuation. All right. So let's look at structural liquidity now. So with structural liquidity, there are types of structural liquidity. All right, but we'll leave that one for another class. But how will I know which zone to buy or sell from? Where are you? How will I know which zone to buy or sell from? Which zone to buy or sell from? Okay, so let's establish this again. All right. How will I know which zone to buy or sell from? So now let's take a look at this. We label this. Let's label this. All right. We have a sweep here. We have a transactional liquidity here. Another transactional liquidity here, and this is our structural liquidity. All right. So now, excuse me. Our whole focus now will be at this swing structure. once you are trading this, all right, anything that happens here, it's not your business. Anything that happens here, markets can keep going up, come down. Nothing here is your business. All you are looking for is to wait for price to take out the structural liquidity before the buy. So let's say, for example, you have something like this. You see, how will I know which zone to take my my buy from? Is it here? Is it here? Or is it here? Our rule tells us that all this is liquidity, it's money. It's money. If we are looking for any entry, we have to wait for this structural liquidity to be taken out before we can anticipate the buy. Alright, before we can anticipate. So our zone will be around here before we can anticipate the buy. So you don't have to be confused. Should I take it from here? Should I take it from here? Which of the zone is correct? Let me give you an example here. Let's say you had something like this. All right. Let's say we had something like this. You see, so long as there was no, let me mark this one. So we'll be taking our trade from here. Where are you? Great. Taking our trade from here. Why? When identifying the structural liquidity, you are looking at the last low before the main low. The last low before the main low. This is our main low. This is our main, our protected low. Alright. So we are looking for the last low, the closest one before it. And what we can find here is this. We'll go back to the chart to see. So we are looking for the last low before the main low. And if you look closely, especially how price reacted here, you would notice that this is just like a swing structure, but there is no structural liquidity for it. Meaning, what is about to happen? An inducement. There will be an inducement. Being that according to basic market structure, we would have expected that price would have done this to buy, but there is no structural liquidity here anywhere around here. Do you get it? So over here, already our setup is sitting down here. All right. What will give you the extra credibility or confidence to take the trade is to notice this. We have a swing structure with no. We are expecting that price will come down here, induce the structural liquidity here, and boom. So now let's look at some chart examples. Let's look at GBP USD. GBP USD. Okay. Where should I? Okay, let's look at it from here. So this is on a daily, all right? This is on a daily. Now, this thing that I am doing, it is something that you have to train your eyes for. Training your eyes to see the setups, okay? You have to train. So with consistent practice, you'll be able to identify them, all right? So let's look at it from this angle. Where are you? Gotcha. Ideally speaking, we have a BOS, a break of structure here. Alright. When you go into the lower time frame, you'll be able to spot it out. Unfortunately, this free plan will not allow us. So we got something like this, a break of structure here. Then this happens. Let me allow this. Yeah. Then this happens. a sweep happens, then price comes back down for the actual sell. You can identify your structural liquidity here. This is what takes out and gives us a transactional liquidity, all right, right here. So our first transactional liquidity is here, our second one is here, all right. So this zone is marked out for us. So what happens? You will see that price came back to this same area and sold, all right. Let's say I am making an entry here. I have my 100 pips with me bagged. All right, so it follows the same procedure every time. Just the basic understanding of this can make you money wherever you find yourself, and in every chart wherever you find yourself. So you see, we got our setup here, we got our POI, that's our point of interest, and we finally got our trade execution. All right, we finally got our trade execution. So when you see a swing structure, right, you will have to take your Fibonacci tool. Okay, so you will have to take your Fib retracement tool. Let's say you get a structure like this. All right, we are always focusing on the swing setup. All right, this is where our focus is. When we get our Fib retracement tool, we start by measuring here. We have our discount zone, our equilibrium, and our premium zone. So we buy from our discount zone and we sell from our premium zone. All right, our equilibrium zone is neutral. So we always make sure that if we are looking for buy setups, our buy setups should always be here at this discount zone. Buy setups. So even if, let me say, you have the structure on a daily, if price is correcting, retracing back, you can't wait for price to get into this zone for you to buy. You can look for in your substructures, sell setups, right? You can sell down to this zone. The moment you get here into this zone, you should start looking for buy setups to buy to the upside. All right, so we look for our buy setups in the discount zone. We look for our sell setups in a premium zone. So what happens? So this is what we use to measure. So if I'm taking a trade, I can get my entry here. Let me say I got a setup here, somewhere around here. I know I am entering and my take profit should be somewhere around here. After that, I am out of the trade because I shouldn't still be looking for sell down in this area. What you'll be looking for is a buy setup. All right, so we have marked this area out. We know that this is our equilibrium. All right, so how do I know which zone specifically I can take my trades from? You take out your Fib tool again. Oh my god, you measure from the break, the BOS to the main low. All right, so from the BOS to the main low, we also get our premium discounts equilibrium. You reduce that is in marking your POI. All right, you know that we are taking it somewhere around here, so that is where your zone is, right? You'll be taking your buy from here. You know that I'll take my buy from this zone. So as I mark it, this is going to be my stop loss slightly above it, the main low. Then my take profits will be here. Give me a thumbs up if you are following and if you understand. So your Fib tool, this is what you'll be using your Fib retracement tool for. All right, this is what you'll be using your Fib retracement tool for. So first of all, to measure the whole swing structure, why did you move that? To measure the whole swing structure, I get where from the main low to the current high. All right, meaning I've identified all the swing setup. All right, I take my Fib tool. Right, I take my Fib tool. Where is my Fib tool? Great, I take my Fib tool. I know that this is where my focus is. All right, this is where my focus is. So before I realize, price will give me something called the structural liquidity. All right, and we'll go. Okay, so now I know that if I start selling, I can sell only down to this side. Then the moment I price, this is my structural liquidity. All right, the moment price gets past the equilibrium, right, and gets into my structural liquidity, I know that this it's about to go down. I mark from my main low to the BOS, all right, the break of structure, to get my point of interest where I want to take my buy from. I mark it. I know that is where I'm going to put my entry at. Then I enter my trade from here. I'm no longer looking for sales into this as I've passed this equilibrium zone. I enter I get my entries there, put my stop loss slightly below this one, and my TP up here. The same thing over and over, the same thing over and over, the same thing over and over. All right, the same thing over and over. So I'll get this. Okay, so I think that will end today's session. All right, that will end today's session.